Let's bring in Scott Bauer, CEO of Prosper Trading Academy, joining us this morning to take a look at it. Scott, looks like analysts were spot on with this one.
Spot on, and this is certainly something that the Fed wants to see.
I'd agree.
Nothing outside of a major move, right, of expectations. They don't want to see the real good or the real bad, the real hot or the real cold. This is right in line. It's a continuation, Ben, of what we've seen over the last several weeks, last couple months or so, and it does show that inflation is still calming, that it has not picked back up. You know, my biggest concern still, and this is really after yesterday's GDP print, my biggest concern is still the consumer, that yes, they've been resilient, they've been strong, they're spending, but the amount of debt that they are racking up. But in terms of these numbers here, should be pretty positive for the markets.
I'd have to agree, and this just sort of speaks to your point. We oftentimes say in markets, trend is your friend, right? Continuation more likely than change, and the data has been kind of falling in line with that pattern. Talk to us about, in terms of the consumer, Scott, oftentimes when I hear that, I start to think about the jobs market, right? Consumer debt, as you mentioned and referenced, labor conditions here in the U.S., and it looks like, based on initial jobless claims, still pretty strong, 218,000.
Yeah, that is right in line as well. And, you know, I think the market is really, I don't want to say discounting this weekly number, but, you know, next week, we get the November jobs number. So next Friday, which I think, you know, that's going to be a key number ahead of the Fed meeting, ahead of, you know, the height of the holiday season. So, you know, people should be prepared to buckle up a little bit, maybe for some volatility next week going into the following week with the Fed meeting.
Yeah, you know, coming to think of it, that puts them in a pretty good spot headed in this blackout period. We'll hear from Fed Chair Jerome Powell tomorrow, but this really threads the needle again.
Absolutely. And you know, in terms of Powell tomorrow, there's obviously been a lot of rhetoric from Fed speak, Fed people this week, Waller and Barkin and so on and so forth. And I just can't imagine that Powell is going to tip his hand tomorrow with anything. I have to imagine he's just going to reiterate data dependent. We're going to let things go as they have been going. I can't imagine he's going to speak much where the market is going to look at it and say, boy, that was really dovish or that was really hawkish.
You know, it's not necessarily going to tip his hand one way or the other here, but talk to us here about, Scott, as we look to the U.S. dollar ultimately, does this continue to tip the dollar to the, downside, for a lack of a better way of putting it? I mean, we've seen declines that are associated with inflationary pressures easing. That's what the personal income and spending data is showing us amidst a strong labor market. The jobless claims suggest that as well, and as rates have come off. So, again, does that pattern continue to play out? Do you see the greenback continuing to further downside and price decay there?
I think this level that we're in, 102.5, 103 area, that's a pretty fair level. It's going to take a lot, in my opinion, to see the dollar fall further. And that, what would a lot be? A lot would be the Fed really coming out and just being ultra dovish. I don't think they're going to do that. I just think that right now they like the status quo. They like the fact that the market is kind of doing what they had intended it to do. Maybe, not so much transitory in like they talked about in a matter of months, because this has taken a lot longer, but they see this working now. At least that's their outlook. So I don't see the dollar really reacting too much, especially to the downside, unless they just come out ultra dovish. And when you look at the dollar, Ben, versus the euro and the yen and some of those other currencies that had gained a little bit back here, well, they're now giving back because the economic data coming out of Japan, coming out of China, coming out of the eurozone is not real good. So the dollar is kind of holding up against those currencies, even though we've seen the dollar retreat back from, just a few weeks ago at the 106 level down to where it is right now.
Yeah, I feel like the Fed's in a real difficult spot here right now, credibility-wise, right? Because you could either see them
they sure are
shift suddenly to kind of reflect more what the market's been telling us for a long time, or I feel like they could just kind of dig their heels into the end of the year and potentially stay at these upper levels here for too long, and then eventually have to pivot quite rapidly into the new year as well, and again, risk credibility here.
Well, I think their biggest concern has to be what we just talked about, the consumer, and how bad the amount of consumer debt, the amount of delinquencies that are out there are going to hit the overall economy, because that's going to come up and probably hit us in the face sooner rather than later. So they have to be ready to address that. And, to your point, I hope that they don't remain this higher for longer, too long, and don't react soon enough, because we obviously saw that on the other side with raising rates. Last thing that we want, last thing they want for their credibility is to be on the opposite end of that now.
Yeah, as you say all of that, I'm reminded of how the CPI data out of Europe overnight came in pretty soft as well. So this is, again, speaking of the trend being your friend, something we're seeing not only here in the U.S. but globally as well. Scott, appreciate you joining us here. A solid look at the data here and a look at some financial markets in reaction to Scott Bauer, CEO of Prosper Trading Academy.